What's going on, guys? This is our Discord meeting. Today is going to be all about how to make money in stocks by William O'Neill. We're going to go through a little bit of what the acronym CANSLIM is. We're going to give you a few examples of those. And then, of course, we're going to go through any questions or anything like that. Everybody that's in the Discord, what's going on, fam? It's good to see you, squad. Just always remember, I'm just a talking head. We're here to study. We're here to learn. The more questions you ask, the better off this video is going to be for other people. So if you have any questions, just ask. We will be using the how to make money in stocks by William O'Neill, and we're going to be reading page 9 and then going over the chart on page 11. If you don't have this book, I suggest that you get this book. It's a great, great book, and all of our our forefathers, our leaders that are, teaching us how to trade that we learn from, they all recommend this book as well. So it's not just me, just some guy on YouTube. It's also really, really amazing investors. So let me just read this first part to you so that way you have an understanding. And then we're going to go over CANSLIM, and then we're going to go over a chart. So the greatest, yeah, what's up, Dan?
I have the Kindle version, so I don't have the same page numbers.
Okay, sure. So we're going to go over chapter 1, that first page, and then the name of the chart is Tennessee Coal and Iron 1898 weekly chart. All right. All right, so right up front, this is the revised edition. You'll see 100 charts. That's what they're talking about here, 100 charts all the way through this. Of seeker insights on how the companies set the stage for their spectacular price increases. Don't worry if you're a new investor and don't understand these charts at first. After all, every successful investor was a beginner at some point, and this book will show you how to spot key buying opportunities on those charts, as well as critical signs that a stock should be sold. To succeed, you need to learn sound, historical proven buying rules plus sell rules. As you study these charts, you'll see that there are specific chart patterns that are repeated over and over again, whether it's in 1900 or 2000. This will give you a huge advantage once you've learned to recognize these patterns that in effect tell you when a stock is under professional accumulation. It is the unique combination of finding stocks with big increases in sales, earnings, and return on equity, plus strong chart patterns revealing institutional buying that together will materially improve your stock selection and timing. The best professionals use charts. I read that slow for a reason. I think it's extremely important. I'm going to read this again. I won't read it to you like you're dumb, but I'm going to reread this because I think it's more for me than it is for you. So just pay attention to this. It is the unique combination of your finding stocks with big increases in sales, earnings, and return on equity, plus strong chart patterns revealing institutional buying that together will materially improve your stock selection and timing. The best professionals use charts. And then it goes on to saying, you too can learn this valuable skill. This book is about how America grows, and you can too. The American dream can be yours if you have the drive and desire and make up your mind to never give up on yourself or America. Okay, so with that being said, guys, because that gives me goosebumps a little bit because I've read this book a couple of times, but William O'Neill really pushed people to never give up. You never give up. He never gave up on people. He never gave up on himself. And with that being said, you can learn all of this too. You just have to stick with it. Once you learn it, it's all about being disciplined and then finding those right stocks. So let me go over CANSLIM because we are all based on the acronym CANSLIM, C-A-N-S-L-I-M. So I'm going to read it to you. CANSLIM is a whole other video. I have a deeper dive on it in the trading section, the trading school section, if you want to get more into it. But C stands for current quarterly earnings per share. The higher, the better. So when we talk about quarterly earnings per share, we have Netflix up here with Erica holding Netflix, my trade up for me. Thank you, Erica. When we look at those quarterly earnings, that's why we bring up this mini chart which we have a section in that video on how to set your chart to look like this. But we have the quarterly earnings right here, earnings per share. And you can see we want to see that going up. We don't want to see that down or flat. We want to see it going up. We don't need to get into the percentages right now, but as long as you have an understanding, as we continue on with this video, we want to see current quarterly earnings or earnings per share. We want to see that up. We want to see it going higher each quarter. We also have annual earnings increases. Look for significant growth. So annual increases on this beautiful charting platform, which by the way, in my link tree, click on that link tree in the description. You will find this beautiful charting platform. It's called TradingView. Get yourself the essential plan. It gives me a little kickback. Right here, you can click on the annual earnings and you can see the year-over-year annual earnings. And we want to see this increasing each year. This is very nice as 14, 16, and 22% increase per year. That's really nice to see. So C is quarterly earnings, current quarterly earnings. A is annual earnings increase. N is new products, new management, or new highs. So that is the N in CANSLIM. Now you can see here, we are reaching new highs here in Netflix. So that is one thing. Or if there's new management, let's say all of a sudden, BlackBerry's stagnant, and then BlackBerry decides to come out with a new CEO to help run this business. Well, that can be part of the new cycle to help push it higher. I'm not saying that's what happened with BlackBerry. I'm just saying that this took me by surprise. There must have been some form of CANSLIM happening in this area for it to really take off here, okay? I guess that's not the right route to go. What's that?
New product in this case.
This was a new product in this case. Thank you very much, Daniel. And I want to reinstate, not that because this is going up, there's something in CANSLIM going up. That's not true. That doesn't hold true. But what I'm saying is, if you're looking for charts like a basing breakout, you might decide to go through CANSLIM to see if it fits your criteriums, okay? I don't even know if criteriums is a word, but we're going to carry on. So then next is going to be, so just to finish up N, new products, new management, or new highs. All three of those, if they're all present, that's just adding on to your conviction for a trade. Then S is supply and demand. That's shares outstanding plus big volume. So we want to see where the supply and demand is. That's why we look at these areas, 422, and we see a nice ascending trend line. So 422, when it gets above this area, that's a good sign that there is no longer any more supply and it's all demand. This is demand because if there wasn't demand, the price wouldn't be going higher, okay? Next is leader or lagger. You want to understand what sector you are in. So if you're looking at, I don't want to use BB as an example for this, but let's say you're looking at something like SMCI, which we will look at later. I've been finding SMCI very interesting now that it's finally out of this, what we will consider a stage 2. Let's see, 1, 2, 3, 4, 1. Yes. So entering a stage 2, exiting a stage 1. It looks like it's trying to. We're going to see if it wants to create a new higher low. But where was I going with this? Oh, the leader or lagger. So right now, SMCI on the board of what is leading and what is lagging is not necessarily a leader. Your leaders are going to be like, I don't even know if ARM's really a leader just yet. It does. It does look like it's leading, and it's leading it. So it's one of your leaders. Then you also have, NVIDIA in that same chip space has been the leader for quite some time. And there's plenty of other ones that could arguably be the leader. Broadcom and AMSC, if I'm remembering the ticker symbols right. Those can also be considered leaders, where SMCI, as interesting as it is down here, doesn't seem like it's leading the chip space as it just got back above that 200-day moving average. So understanding whether you're in a leader or a lagger can take focus using CANSLIM. Then, of course, we have institutional ownership. It always says to follow the leaders. The reason why we want to be with the institutions, or we want to at least understand that institutional ownership applies to this stock, is because if the big guys aren't trying to feed money into this, then nobody is going to move this stock higher. You and I aren't going to move SMCI higher if this whole Discord decides to put our home's equity inside of it, okay? It's not going to move this needle, not even the slightest bit, because you need, $35 billion, to own this thing. So, our measly, conjoined, 30 million on a good day between all of us, I'm just guessing, our 30 million isn't even going to move this stock. Okay, you need to be a part of institutional ownership. You want to know where they're buying and where they're selling, and that's accumulation, that's distribution, and that is just that's institutional ownership. You want to see that they're a part of it. And honestly, I don't do anything fancy for this. I usually am already looking at stocks that have a high amount of volume, but you can do a simple Google search on Google search on Yahoo Finance, and you can look up SMCI right here. And then it's going to bring up all of this, and there should be holders right here. You click on holders. Let me just finish. And then you can scroll down and you can see all these holders right here. That's one way to do it if you don't have TradingView. There's also a way to do it in TradingView. I think that's what Daniel's going to touch on here in just 1 second. You can run through all the holders here, and it's important to note here too that multiple holders, not just one holder, is holding all of the shares. You want to see a group of institutional ownership, because if one institute owns the majority of those shares and then they decide to pull out, then you're going to see a big fluctuation in price. Dan, what you got?
Two things. One, I just Google it straight.
Okay.
Does whatever ticker have institutional support, it'll come back. Now, if it doesn't give you a website, Google tells right at the top whether it does or not and who they are.
Oh, okay.
And I will tell you firsthand, so I've started doing this regularly now, and I did get into a stock a couple weeks ago that only had 3. And it was strange because that morning I was talking to Stewie. I said it's going to suck if one of these guys pulls out. And that afternoon, I guess one of them did, because the stock went on to hell quick.
Yeah. Yeah, and that could be one thing, looking at institutional sponsorship, that could be one thing more that we could do to take a step to say, hey, is this a stock I really want to be in? And I will be honest, this is why we do these refresher courses, because me personally, I have really not done that. I need to start doing that more. I really do. Like, I really want to see if Redwire, I think it's ticker RSW that I got stopped out on today, did that have institutional ownership? Did it really? I highly doubt that it did, especially because if I skimmed over the financials like I did, I always say you're a loser unless you're learning, and I have a lot to learn still, especially if I'm still buying stocks like that, okay? Actually, let me continue on here. So institutional sponsorship, you want to see it there. You want to see that it's not only prevalent, but you want to see multiple institutions buying that up. So if one leaves, it's not going to take the whole stock down, okay? And then M is market direction. Now, guys, we go over market direction constantly here. It's one of my favorite things. If we look at the S&P 500, we just want to know, are we in a bull market or a bear market? And I always say it pays to be positive because, and I can just use this, I'll go to the resource section in our Discord and show you guys. I always bring up this picture because I think it's very important for everybody to understand why I say it pays to be positive, because we're most likely to be in a bull run. Look at this. The bull markets outweigh the bear markets tremendously, folks. Tremendously. Okay, so first of all, there's always bad news. There's always something to worry about, but you need to be positive in this market. You need to be positive on these pullbacks that we're going to see the light of day until we break a new higher low. Okay? We haven't broke these new higher lows. We're getting a tight range, and now we just broke new all-time highs again today in the S&P 500. So which way is the market direction? Right now, it's up. We are in a bull market, and we've been talking about bull markets for quite some damn time now. And that market direction is important because we want to be going with the market. You want to have the market to your back, so that way when you're buying that trade, it's helping push you along while we continue to make money. All right, so market direction is very important. That's why we always say, you know, we are on a long-term uptrend, right? This would be a short-term downtrend, right? And right now we've just been playing sideways, but now that we broke this area, we're back into a new short-term uptrend, as long as mid-term uptrend, as long as long-term uptrend. So things are looking really, really good here. This looks extremely bullish to me. I could be wrong. We could go down to zero tomorrow, okay? But it pays to be positive. Look at the market in a light of where's your support and is it continuing higher. Now that we have a better understanding of CANSLIM, do we have any questions before I kind of go over a few CANSLIM candidates and a chart from the previous history? Does anybody have any questions about CANSLIM that I might be able to answer?
Can I bring up one more point about institutions?
Of course.
Most institutions have a policy to not buy stocks under $5.
Absolutely. Usually, though, that's probably mainly due to liquidity, right?
I don't know reason why, so we do.
Okay. Yeah, we you know, there's a sweet spot for everybody when you're trading, but you know, when you're trading stocks that are cheap, they're cheap for a reason. You know, that goes right back to supply and demand. If more people want it, the price is gonna keep going higher. People are going to start hoarding it. They're gonna start keeping it. You know, just like the toilet paper. More people kept it. More people wanted it. The more people hoarded it, the worse it got during that crazy COVID. You know, we survived though. We survived. So
David,
yes.
what percentage of institutional ownership would you say is good to look out for in terms of percentage for a stock that you might be looking at?
Well, I am going to, because I don't want to give you the wrong answer, I'm literally going to look up that right now. Actually, B. Stewie, do you know that off the top of your head? The institutional ownership, what percentage that you want to see? That's a really good question, and I wish I knew it off the top of my head.
I'm looking at one that's 32% institutional ownership.
Sure.
It's trending up, and it went high today, and then it started moving sideways. It almost seems like it formed a little base today. I listened to what you're saying right now, and I looked up the institutional ownership is at 32%. So I was just curious.
Yeah, I mean,
That's a little low to me. Most of the ones I look at are like 60 to 80 usually. 30, a little. So how many is that though? Can you tell how many?
Well, it's Oxy. It's a ticker, and I know that it doesn't look really good on the trading view, but it really moved today. I made 8% on it, and it just started moving sideways, and it doesn't go low, doesn't go high, just moving sideways right now.
well,
Actually,
For CANSLIM, you want at least 70-80% institutional ownership.
Okay, so it's a little low then.
yeah, but it's Oxy though.
Or stocks.
There's a lot of shares out there, and you know, there's a lot of people there's a lot of retail in it as well. So I would worry about it less with a company like that. It's kind of a safe place to put money, so.
but it can be over-owned too. It says in here. So you do have to find that sweet spot. And to be quite honest, I don't have the perfect answer for you. But what I will do is get to the bottom of it and get back to you. I think that's a really good question. But it does say here that it is possible for a stock to have too much institutional sponsorship, but you do need to show that it's prevalent. And I think that's probably going back without reading the whole book while we're trying to do a video. I think that just kind of goes back to over ownership, meaning one person owns 60% of the shares and then they decide to sell their shares, and you're just the little retail owner holding, on at, $100, and they're going to sell 60% of their shares. You're going to lose your ass. So I think that that's what they mean by over ownership as well. So we'll have to get back to you on what CANSLIM says about the ownership, institutional ownership. But I would say that that's a really good question. Thank you for that.
David,
Yes, Samara. What's up?
I also want you to add that also you can see the stock, the people who owns the stock, because also that is very important, because most of the stocks they don't own any stocks, and they buy other stocks. But if they invest in their own stock, that is a really good thing.
Insider ownership, I think that you're trying to get me to touch on. Yes. So Zamora, that's a great point to bring up too. So I when I first started, I thought that was extremely important, but these are all adding up to your conviction. So institutional ownership is important, because if they don't believe in themselves and they don't own their own shares of their stocks, then who is going to believe in them, right? So yes, you can use that as well as a gauge to see if it's being held not just by institutions, but by themselves, by the insiders, because they believe that their shares are going to produce more fruitful gains in the future. Very nice. Does anybody else have to touch on? What's up?
What comments have we doing some lot lately? So when you look up the institutional owners, not the ones that own the company, the outside company, the hedge funds, you'll see what's selling and you'll see some buying. Don't worry so much about that. They move in and out of stocks all the time. So if there's like 10 hedge funds in a stock, you're going to see like 3 of them have moved out recently, and maybe 2 of them have moved back into their place. So they kind of alternate all the time. I wouldn't trick too much when you see some leaving. Now, if you see them all leaving, that's a different story.
Yeah, you'll see it in the price before you get the institutional updates, because you see it in the price before you actually get that institutional updates, because they don't. I think they get 6 weeks or 3 months or something like that. I forget what it is. I always forget, but they don't have to report. So.
What about like public figures that have a lot of capital that go into certain stocks, like the Congress people, or like Warren Buffett bought Oxy?
Yeah, none of those people have to submit their documentation immediately. They have time. But
So the question was, is that like also considered some form of institutional ownership, since that person has so much capital?
yeah, well, if they're an institution, yeah, it would technically be institutional ownership. Warren Buffett is an institution. He's Berkshire Hathaway, so he is an institution on buying this capital. So.
Or like Pelosi?
Yep.
Okay.
I wouldn't say Pelosi is, no. I mean, she's buying a lot of it, but she's not buying institutional size amount, I could be wrong there. Correct me if I'm wrong. And shout out to you, Pelosi, if you want to go on a date. Love you, girl. Anyway, I thought my wife was behind me. I got a little nervous. So what I want to do now is I kind of want to go into a few examples, guys. My favorite example is going to be NVIDIA, okay? And you guys are always going to see me bring up NVIDIA. And, I hate to take this saying from Trader Lion, He had, I forget, maybe you guys can help me. He had a guy on there just, I think it was last week or last month. It was in that time frame. And he said, if you want to learn how to trade, all you have to do is look at NVIDIA. NVIDIA has everything in it. And it's so true. It's so true. And I always come back to NVIDIA, and I always talk about NVIDIA on all, I mean, you see my lines drawn out. That's because they're all base, they're all trend. I don't have my trends on here still, but I have trend breakouts. We made a ton of money on NVIDIA, and it all started here when this used to be called the $500 area. Now, I did a little research on this because it's kind of hard to get the data now. But we can go back and we can look at all of these EPS. This thing got on my radar when we had this earnings gap up. Why was this one important? Well, we had this earnings gap up and it was a double whammy, 18% surprise and a 10% surprise on earnings and revenue. So it didn't just catch my attention, but it caught the attention of many others. And you can see here, it held its lows for that day, created a nice trend, and it broke out. This trend breakout served to be its area of support for quite some time. Now, NVIDIA, nobody forgot about NVIDIA. NVIDIA was just lingering and trading sideways after a huge gap up, and it started to do a price discovery. That gap up was new all-time highs. They also just came out with a new product. I don't think I have the product right off the top of my head, but everybody was buying a specific chip of theirs. And let's see, EPS. I'm trying to find out. Okay, NVIDIA's data center and AI-related products, GPUs, like the H100, is what contributed to its huge gains. And so not only did it gap up to new all-time highs, so remember that's part of CANSLIM, the N in CANSLIM is new all-time highs, but they also have a new product that was selling like hotcakes, and that was the H100. Okay, so now you've hit that. You also have a market that, if I remember at the time, was just coming up off the lows. So I think it was October of 2022. Yes, so you can actually see it right here. October was the low of 2022, was the low of the overall market. So you can see we're coming out of that bear market, and we're actually starting to go into better territory. So if you look at the S&P 500 for the market direction, you'll end up seeing, let me zoom out here, you'll end up seeing that we made the third new higher low here before we started to head higher. I actually made a video in March to actually marking this low and saying that we were done with the bear market. And I was saying it then that it was, in my opinion, obviously. I'm very proud of that video because that was my first confident video that the market was heading higher. And then here we are in NVIDIA with the market direction looking positive. We also have a psychological area of 500. We have earnings and our earnings EPS coming in quarterly over quarterly, very nice, and the sales were doing amazing. We also had the new things we just talked about, new products and new products, new highs. It was a leader at this time. So I don't know what exactly was leading the chip sector or the data sector, but I will say this. I had no idea. I wasn't even thinking about semiconductors much at all or even talking about them until NVIDIA's earnings on this date. And then I needed to know all about them, okay? So it was like, it was a big realization for me. It was a big realization for me to see something gap up, new all-time highs, and it's like, well, what is this? And started looking into chips a little bit more, and then realizing the whole nation of chip factories that are actually out there. Okay, so it had the leader. It was its leader. It had the current quarterly earnings, the annual earnings, the new products, the new highs. It had the supply and demand narrative, meaning right here is the supply and right here is the demand. I'm sorry, right here is the supply, Right here is the demand. Every time it gets back down here to that $40 area, it's getting bought up. That is your demand. People want it here. And right here was your supply. Your supply was at 50. Well, what happened when your supply and your demand areas start to diminish? Well, right here you can see the demand is now at 45. Then the demand was now at 48. Then the demand was, oh, there is no more demand down here. People are eating up the supply like hotcakes, and then it heads higher. So we have our 3 new higher lows at a basing breakout at a psychological area in a CANSLIM winning true market leading stock. Mickey Fickies, wake the hell up. This is what makes you money. Now, what's the hardest part about this is waiting for these damn stocks to set up. Being able to buy in for proper risk reward and then holding on until your sell rules tell you to sell. I did not catch this full move. I caught a quarter of this move because I did not have the cojones to hold on to my sell rules. This is actually where I started to implement a lot better sell rules because of this, okay? So with that being said, NVIDIA is an amazing CANSLIM candidate. This $500 area is something that I want everybody to just let burn into your brain. Just look at this beautiful price action just for a minute. Give yourself a second here and look at this. I mean, if I got rid of all of this, you can see it clear as day how you have this tightening range. It gets tighter and tighter. It's getting smashed within this box right here. You have this top and this bottom, and then this bottom gets tighter and tighter until alakazam, we're making money. That's spam, baby. Crack the top. Let's do this thing, you know? So I think it's very important that everybody knows and understands NVIDIA and that $500 area that, should have made me rich because of all the people that I told about but did not have the conviction to hold, obviously. So keep that in mind, guys. Keep that in mind. Yes?
So can that tightening be seen in the volume?
I think you're referring to the volume contraction pattern.
Yeah, you would see that tightening, wouldn't you?
Yeah, well, yeah, you're going to see when it trades sideways like that. Let me bring it up on here really quick. A lot of the times you'll see the contraction pattern. So let me go back to that same area. So we're talking this $500 area. Well, it's about average. It's just trading sideways. Now, if you see, let me see here. Let me go back and look at this. Yeah, no, the volume seems to be pretty even throughout. It's pretty even throughout. Yep. At first, I was going to say, well, you could see it here. It did get bought up. Over here, it started trading much less before it went higher. But yeah, during this $500 accumulation area, it just looks even to me. Like we were talking about earlier, I don't necessarily, unless we're looking for a trend breakout where we're seeing areas where volume is reducing, like this is a nice VCP pattern, but you don't see it contracting here, so we don't have that. This is a nice VCP. You can see it from here all the way down. You can see it here before it breaks out. So that's volume contracting and it's getting tight before breaking out. I like that. But no, in this basing pattern, no, I'm not seeing anything really. I would like to think that, as it gets tighter here, we're seeing, and well, I mean, Dan, if you look at it really close, the least amount of volume traded, are at this pullback specifically. You can see how as it gets really, really tight, there's like nobody buying and nobody selling. So that's actually interesting. That's something we might want to really look into before these big breakouts to see how much volume really slows up before it actually gets to ripping and roaring. So appreciate the question. And so now I want to turn your beautiful eyes, your attention. If you guys have the How to Make Money in Stocks, the CANSLIM book, I'm going to be looking at page 11. This is Tennessee Coal and Iron. Now, I know I can't draw this on here for you. I'm going to show the camera for those that are watching at a later time. But one thing I wanted to point out in this, because I'm trying to go through a stock chart a day. Sometimes I'm doing 2 a day just because I don't like staring at one stock. But when I'm looking at this, this is what I mean by the yearly basing. So this thing based out for a year, created new higher lows and new lower highs. And actually, I think I posted a picture just the other day in our Discord. I could have brought that up. I should have brought that up. Long story short, guys, I just want to say that I love seeing my charting pattern. And I say my, but it's not anything new. I haven't reinvented the wheel. I'm just a copycat who stole his new higher lows, new lower highs from many, many other traders who have made a ton of money. That I stole that. Yeah, I stole their idea. I don't care. I'm branding it as my own. I'm not going to reinvent the wheel. No, I'm going to hop in that car and I'm going to freaking ride, baby, ride. I like seeing these timeless stocks, these 3 new higher lows, the 3 new lower highs on a yearly trend breakout. This thing is amazing. And this was in 1898, guys. Well over 100 years ago. My same strategy is right here. So it's beautiful. I just wanted to bring that up because, you know, and he's buying it literally. He has a buy sign exactly where we would say to buy. Tightening range. It's a beautiful thing. 3 new higher lows. Like, let's go, people. Like, this is exactly how you want to trade stocks. And this falls under the CANSLIM. Everything in this falls under the CANSLIM. So I also want you guys to kind of go through this under your own will and go through 1 chart a day. You can go through 2 if you want, but I think 1 chart a day so that way you can kind of become a little bit more responsive to it and something to think about. Like, you know, some of these have, you know, market was closed during World War I. You know, I'm just so grateful. It's not anything we've had to even think about, you know, so I'm extremely grateful for that. And this is beautiful. Thank you so much, Jolene. Jolene has posted this for us. Actually, I think she took the picture that I took earlier. But regardless, so this is the 3 new higher lows, the 3 new lower highs. So if you guys want to look right here, here's your high. Here's a new higher low. Here's a new higher low. Here's a, new lower high, new lower high, new lower high. This is a low, a new higher low, a new higher low, and here's your newest higher low. Where if you see in between this and this, or this and this, is all a great area to take risk using either this low or this low, depending on what your strategy is to get inside of this stock. But regardless, I could have taken it at either price point, and you would hold on to this until it broke below the 10-day moving average, or in this case, because this is a weekly time frame, the 10 weekly moving average. So thank you for bringing that up, Jolene. Thank you so much. But yeah, this is Tennessee Coal and Iron from 1898, the same basing breakout strategies. And here, if we go back and look at Costco, this was one of the first basing breakout strategies that I have found that was on the same time frame, guys. If you look at Costco, let me bring it up on a way cleaner chart. The trading view is just way cleaner. Here we go. So here's Costco, guys. And if we look at Costco, you'll see one thing in common. Look at this, 3 new higher lows, 1, 2, 3. Well, there's actually 4. And there's 4 new lower highs as well. Costco, I looked up the things on Grok. They had awesome quarterly. They had awesome, it was almost intermittent, but they were pumping out some really good calculations for their EPS growth and their sales as well at the time. So it was really nice to see that they were a CANSLIM candidate. Now, they were producing new stores, which was a big one. The current market condition at the time, I do not recall, but it was May of 23, so we were in a confirmed bull market at that time. You can see its previous earnings was an expected beat, and before they broke out, they actually had a negative response before breaking out. But these three new higher lows, these three new lower highs, same response. Over a year goes by from, May till May, and you can see it just gets tighter and tighter, and then finally breaks out here above all the moving averages and continues to head higher. So this is just another one of those where you can kind of understand and say, hey, look, I get, uh-oh, I think I lost everybody. Is everybody still there? Let me see. All right, cool. Thanks, guys. Yeah, my Discord disappeared. I was like, oh, I think I exited out on you guys. All right, cool. So so Costco, if we just take this picture just one more time, and we lay it side by side here, if you guys can see that, you can see the relation. You have this trending down right here, this trending up right here. You have this trending down and this trending up. This is 1 year time frame. This is a 1 year time frame. So there's correlations from over 100 years ago that we can see in these charts. If I just stretch this out, it'll make it look just like that picture. This is what that picture looks like. Look at that. Here, and then you zoom out and then you can see it growing just like it did in that picture. And that's just correlating. That's just over time you understand how the chart patterns, how they kind of lay out. Bada bing, bada boom, you'll be making money real soon. Another CANSLIM candidate is this HIMS, and I'm telling you, and I will constantly bring it up. I'm almost embarrassed of myself for allowing this one to kind of slip under my radar. I brought this up on the leaderboard list, and I left it on the leaderboard list for quite some time. And then as it crept just below that 50-day moving averages, I just pulled it out rather than accepting that it's just retesting this beautiful basing area breakout. I'm embarrassed, guys. It did it here too. Look at, tested the base, broke out. Now it tested the base and it broke out. It's a leader. This thing has a new product that everybody wants. Now I'm going to go through the CANSLIM. Current quarterly earnings. You can see here, under the quarterly earnings, their EPS growth is ridiculous. Their sales growth, ridiculous. They're killing it. They're absolutely killing it. The market direction, we know that we are in a bull market right now. They have a new product. The new product is a weight loss drug. And I think HIMS does some other things, but we won't get into what else they do. Just while I'm on the fly, I'm trying to bring up CANSLIM. Is it a leader or a lagger? Well, I can tell you right now, it's in the health services. There's not much out there in health services right now that's doing this good. HIMS has moved up over 100% just this year, and there's only like 6 or 7 stocks that have done that, okay? SMCI is one of them. WRD, TEM, OKLO, and NUTX, GRAL. Those are the only other stocks, aside from HIMS, to move up that much, that fast. So they're up. They went up over 106%.
David?
Yes.
I've heard the only reason it's doing that is because it's a short squeeze currently. Because there's not really any reason for it to be going up like that. Is there, and I don't, I can't verify that, but how do you know, is there an easy way to check on stocks? I know you can see maybe what the percentage of shorts are on stocks, but is there an easy way for us to kind of look out for that, for something that might be experiencing that?
Sure.
I thought if a stock was going to get squeezed, it has to have a low float.
Sure. So let's go over both of those questions. So first of all, if you want to know the current short float interest on this, you can go to FinViz, type in HIMS, scroll down here, and right here you can see the short float that's right here and the short interest that's right here. Okay. Oh, and look, Dan Bob and B Stewie right here. Return on equity is right here. So that's nice to see. But here's the short float that is a little high. You usually don't want to see it that high. When what you're talking about is if you don't have to worry about the short interest on a stock if it is if it has a small float. So what we want to do is know what the float is as well. And I'm assuming this isn't a small float because we have a market cap of over 15 billion. So let me just go into this and then I'll go a little bit deeper into that for you, okay? So the free float is 178 million. So that is it is on the smaller side. That is for sure. And I know that you're saying that this is, you know, a squeeze play. So what also can enhance a squeeze play is if too many people are on one side. So if too many people are shorting this thing, and you get people that are pushing these things out, yes, you are going to see a short squeeze. So this will help carry it to the north side. But I'm not 100% certain that this is all a short squeeze. I'm sure this is squeezing some shorts, which is helping carry the momentum. But I am not so sure that this is the only reason why this is moving higher. And I'm not 100% sure about that. That's just my first thoughts, Erica. As for what you said, Noe, yes, the smaller the float, the faster it's going to move. In this case, me not actually realizing until we looked it up, it is of a smaller float. So if we look at this, the free float, 178 million, that's a pretty small free float. So let's just keep that in mind as well. But I'm keeping an eye on HIMS. I like what's going on with it. It's definitely going against the grain of the overall market. Is it a complete CANSLIM candidate? Well, I'd say their annual earnings are looking good. Their quarterly earnings are looking good. Their EPS is looking good. And right now, it's not on any technical plane. If this would have shown that there was resistance here at this base, where we could have seen supply and demand, then I would have been able to make a play. But as you guys know, a lot of these cups without handles have been working out, and HIMS is doing just that. Yes.
I really want to think of the Rocket Lab is gonna do the same thing right now because all the things that you just comment, that he just have it.
Well, I really am happy that you brought up Rocket Lab. And listen, I'm never the one to want to burst anybody's bubble, but I'm gonna say a few things about Rocket Lab. So because we are talking about how to make money in stocks and looking at CANSLIM, let's go over Rocket Lab and see why it has a bad taste in my mouth. So the very first thing that you can see here on their earnings, you can see that they're actually projected to continue losing earnings per share. Okay, you can see it right here. They're literally estimating that they're going to lose money per share on each stock that people own. And if we scroll down here, you can see on the quarterly earnings, we're actually have a negative net income here with a negative net margin. So it's not making money. It's not doing so hot. Now, when it comes to the sales, according to this little diagram, we have sales here. So that is a good sign because without sales, then you don't have any earnings. And without earnings, well, then you're just going to be a penny stock overnight. So this right off the get does not fall in line with our CANSLIM candidate. So when I was looking at Rocket Lab, I loved how tight it was getting. I've liked Rocket Lab back here when we had a basing breakout down here and two trend breakouts and then another basing breakout here. To me, this is kind of on its second leg. You can consider this the third leg, really. Maybe even fourth, depending on who you ask. But for me, this is wide and choppy now. And now that it's broke that 50-day moving average, I have to be hands off this thing, unfortunately. So it's not a CANSLIM candidate, and there's a reason why I should have really never been trading this. Now, you guys will see me trading certain things like absolutely shout out to Swolzenberg for calling me out. I talked really bad about, what is it, RWD, I believe it was, Redwire, RDW. There it is, Redwire. I talked a lot of crap to myself because I got into a stock that does not have really good earnings per share and decreasing sales growth. If we look at this, it's not so good. And he says, well, if you're going to be in RDW and be mad about it, why wouldn't you look at your RBRK stock? So I'm like, RBRK. So these were both taken on a technical structured pattern. So then it makes me think, well, what's going on with RBRK? So I look, and you can tell we're starting to get some quarterly earnings and some annual earnings, but they aren't making that money. They are not making money. They're not, necessarily leaders in their group. So it makes me feel like I could be in something better. Now, when I look at Rubric, I see new all-time highs. I see that it's technology, service, and information technology, and we are kind of standing up on sales growth, but when it comes to earnings and when it comes to actually, steady growth, we're not seeing that so much in here. So we haven't made $1 yet from this stock on your EPS. So why would I expect it to make me money in the future? So it's definitely something to keep an eye on. Something you can add. Now, some of us in the Discord, we don't care about financials, right? I mean, some of us just want to see a good technical sound chart, and then it's good to go, right? You let it go. So, with that being said, oh, I see. Jolene said, I think there's increased interest in shorting HIMS because it looks parabolic. So she's thinking the increased short interest is due to it looking parabolic, which I would have to agree with that as well. Now, I don't know how soon FinViz is updating their information to understand the short interest of something, but HIMS does look like it's going parabolic. It does look like a good $60 short area. Boom, people are getting squeezed. So, if it was in the past 3 days and they updated it, I could definitely see people trying to pile in on the shorts here. Definitely, Jolene.
Mention two goals to answer Erica's original question. One of the things a lot of us use today is ChatGPT and Grok.
Oh, yeah.
You mentioned Grok earlier. But when I'm looking up company financials or wanting to know what the ROE is or the EPS, if I can't get it directly through TradingView quickly, I just go right to ChatGPT. Absolutely brilliant tool to use.
Absolutely. That's exactly what I was using it for before we got on, because I wanted to make sure that, my Costco earnings during that Q3 and Q4, just like I did for NVIDIA, and it gives you everything. It gives you a whole breakdown. Here's, the Carvana. We were talking about Carvana and how I thought that they filed for bankruptcy, but they did not file for bankruptcy. They actually fueled speculation of possible bankruptcy filing, with some suggesting prepackaging bankruptcy plan in the works, but they actually did a restructuring, and they slashed annual interest expenses, and they did a really, really good job, curbing that bankruptcy filing, and rather doing like a restructure. So you can do anything with AI. I'm telling you guys, just type it into AI and it will spit you out the facts and the knowledges that you need. You'll find out, you can even do it using the CANSLIM method. You could say Grok using the CANSLIM. You know what? Let's do it. Let's do it right now. Let me go to X. And this is a good time to tell you guys, if you haven't already and you're watching this video at a later time, make sure you hit that like, hit that subscribe button. I have an amazing community here. We have a Discord. It's free. We have a Facebook. Click on it. Join up. It's free. Everything we do here is free, and it's going to be as free until I get sick of the spammers. Then I'm going to start charging $1 a month to keep it as cheap as I can for everybody and spam free. But until that day comes, Hit that like, hit that subscribe button, join up, guys. We do this every Sunday and Wednesday. Now, what was I doing? Grok. Let's go to Grok. So let's go to Grok and let's say, let's say, let's mute that, please, and thank you. So we go into this and we say using Grok, using the CANSLIM method of trading is root under that method. Yeah, thank you. You need to be faster. To determine whether a root aligns with the CANSLIM method, we need to evaluate against the 7 criteria outlined by him. We just went over those. So the first one, it says current quarterly earnings. It says typically 25% or more. Personally, I use 20, but it doesn't matter. The higher, the better. Root is an insurance technology company that went public in 2020. Historically, that has struggled with profitability due to its focus on growth in disruptive technology to audio insurance space, blah, 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 blah. As of late the most recently wild available data, Root reported ongoing losses, though it has shown improvement in reducing losses per share. For CANSLIM, we'd need to check the latest quarterly earnings, grown at least 25% year over year. It would fail this criterion, given its history, it's unlikely to meet this threshold unless a dramatic turnaround occurred in 2024. Its annual consistent growth, ideally 25%, 3 to 5. Annual earnings have not showed consistent profitability. New products, let's see. Nope. Supply and demand. Relatively small float compared to a large cap stock with approximately 4.16 million shares outstanding of its IPO structure. So just to show you guys, you can like type in anything and it'll give you if it's under the CANSLIM or not. Okay. So does anybody want to try a new one? Well, let's do hymns.
Let's do YXC.
What is it?
The YXZ.
YXZ. Okay, we'll do that one next.
Yeah.
All right, so under HIMS, under this, up from a loss suggesting a trend of earnings acceleration, HIMS likely passes this criteria. Annual growth, strong recent growth, but no long-term history yet because it's fairly new. New products, this criteria is resounding yes because the stock surged 17 to 24% today on this news. The news was that HIM announced the acquisition of Tri Labs to offer at-home blood testing, expanding its diagnostics, and its GLP-1 weight loss. That was its new one that we talked about earlier. Let's see. Oh, and it was for $199 a month. So that really exploded growth. This one here says, aligns with CANSLIM focus on supply and demand dynamics. This checks out. So let's read why. It has about 205 million shares outstanding with a float of roughly 170 million. Short interest is high, 33% of the float, 56.5 million shares as early of February 2025, and today's volume spiked with Tri Labs news indicating strong demand. So it wasn't just the short float, it also volume spiked because there was news that they acquired Tri Labs as well, guys. So look, now in the supply and demand, it's giving us more valuable information that we could use. So this is beautiful, right? Leader or lagger. Look at, given this dominance, HIMS is a clear leader. You know it's a leader because I said it was a leader. I sound so cocky. Daniel, anything you want to say on that?
Yeah, you could fix the water heater.
I did too. I fixed it before I left there. Whatever. Institutionals. Go ahead. What?
I told you that it was gonna be $100, and you say no way.
HIMS? Did you say that for HIMS? I don't remember.
Oh my goodness.
I'm sorry, but I'm going to give it to you
That's okay.
because you say every stock is going to go to 100. I'm only kidding with you. But this here for institutional ownership, accelerating buying institutional. So 60% of HIMs, Vanguard, BlackRock, buying accelerating in 2024 as profitability emerged. And the acquisition of the weight loss drug successfully bolstered this to trend into 2025. And the market direction signaling a confirmed uptrend, right? So right there, you can see it is a CANSLIM candidate. So definitely, definitely awesome. We can do YXZ, and then we'll go on to any questions and we'll close out for the night. So YXZ. Oh, there we go. Are you sure YXZ? There we go. Yeah, okay. No, are you sure? You mean XYZ, right? Oh, now we're not talking. Okay. XYZ, let's take a look. CANSLIM, okay, current quarterly earnings, it passes. Let's say XYZ had a solid 3-year growth trend, it passes. Let's see, it qualifies for the new product, services, and events. Supply and demand, 500 million shares in flat volume. I'd struggle here. So supply and demand. I think what it's saying here is XYZ does not have what it needs for the volume growth. So let's take a look here. Its volume is trading 7.19 million. Its average is 5.51, and its market cap is 52 billion. So maybe there's something I'm not understanding here, but requirements limit share supply with rising volume demand. So I think that what it means here is it's not tightening up. So I would like to see this thing starting to tighten up right here, actually, because this is where its area of support is. So if it tightens up here and creates this as a new higher low, I could see that supply and demand getting a little bit tighter here. So I could see that. And you know what? I better just put this XYZ on my stock chart, because if you tell me this is going to go to 1,000, then I'm going to have to put my home's equity into this. Next up is the leader or lagger. Let's see. This says industry leader with relative strength of 80 or higher, XYZ. In the AI sector, its stock rose 200% in 12 months versus the S&P 500 4%. Its RS could be 95, making it a leader. If it trails peers like NVIDIA or PLTR, it's a lagger. So now we know that XYZ is a lagger to PLTR and NVIDIA, okay? Institutional sponsorship, 40%. So Fidelity owns 50%. So yeah, you have institutionals ownerships backing it up. It's good enough. And of course, we know the market direction right now. So it fits. It seems like it fits the criteria. Conclusion, 30% quarterly EPS growth, 25% annual EPS growth, a new AI widget driving a 52-week high, tight supply with spiking volumes, sector-leading relative strength, growing institutional ownership, and a bullish market backdrop. Bam, 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 bam. We just did the CANSLIM showing you how to use AI. You can use, Grok like I do, or you can use, DeepSeek. I only said that because I wanted to hear your beautiful voice.
You aware that there's trade GPT that's specifically designed for what you're doing?
No, I didn't, but I know that if you pay for that stuff, it will remember everything that you've asked it, so it can cater itself to you.
There's a open source free version of Trade GPT.
Oh, that's cool.
It works for exactly what you're doing. It's designed for.
Oh, well, that's perfect.
Put that link in Discord for us.
Yeah, that would be awesome.
I'll put a link.
Awesome. Now, Grok 3 just came out on Monday, and it's supposed to be the most advanced there is.
Grok 3? Well, we'll see.
This is not what Grok 3
Oh, okay.
Yeah, it's supposed to be the most advanced in the market.
Yeah, so Jolene's giving me shit for my comment earlier when I said, who said it's a leader because I said it was leader. And she says, who said it was a leader? You kicked it off the list. She's giving me crap. Get your mic fixed. I don't even want to talk to you. I'm not looking at your comments anymore, Jolene. So go get your mic fixed. Oh shoot. So that is how we do it through AI. And of course, No E also mentioning that there's a Chat GPT or some type of AI that is for trading as well. Check that out, but always be skeptical. Always be skeptical. Make sure you're not punching into any information, to no scammers or anything like that. But does anybody have any questions for me that relate specifically to the topic of CANSLIM or using AI to find the proper stocks or supply and demand or any of the CANSLIM acronym?
Yeah, I have one question. So, often look at similar items on the CanSlim.
Uh-huh.
I mean, I've heard of it before. You went over it really well in detail. Appreciate it. But I don't often go over items that were already on there without knowing what it actually is, CanSlim. And I have questions. So, there's some companies that will meet all the criteria of that, but their stock doesn't move like the way you're showing there,
Yeah.
because a lot of these companies are, you'll see articles saying, is this company undervalued? and and then there's the companies that meet all the criteria except for one, but the one criteria that it's lacking, it could easily obtain with given time. So is it important to look out for companies like that may end up to put on your watch list, that may end up actually becoming a leader?
Yeah, dude, I think that's a really good question. And that's hard for me personally because when you're trying to compartmentalize everything, I want to have a list of leaders. And I wish it was so simple as like, oh, well, I just look at these 10 stocks every day. And if one of these 10 stocks set up, then, I'm good to go. But yet there's this stock over here where the EPS looks good and the growth looks good, but it's not setting up yet. There's this stock over here that's setting up technically, like it looks, the trend break is just right there, but it doesn't have the EPS and the sales growth over here. So I'll just put this one on the watch list too. And next thing you know, you got 100 stocks on your watch list and you're not really focused on any one thing. So the best thing for you to do in that situation is to have multiple watch lists. You need to have a watch list that basically your roster is finally like lining up to get to your starter playlist that you're focused on. Because if you're in the middle of the day and you're getting alerts for things, you have your alerts for your A list set up. If this alert goes off tomorrow, I need to really understand what's going on. Look at the price action because this is like, I've set my alert 3 times. This is this is the spot. This is the spot. And then there's going to be other things where the alert goes off and it's not on your top 10 that you're just going to want to keep an eye on the price action. And well, I did my research on this. It doesn't have the sales growth or the EPS growth, but I want to take it. Well, if it's still within your structured plan, go for it. Just remember, if it doesn't have the sales growth and it doesn't have the EPS growth, maybe reduce your share size a little bit. Maybe it gives you the inclination to go a different route. Maybe there's something else that might be worth putting more money on. So that's the process. What's that?
Go ahead, finish.
No, I was just going to say that's the kind of process I'm at right now is canceling every piece of noise out that I can, but still having enough in the broad sector to be able to understand what's going on. And I don't know if that makes sense to you, but it's basically trying to stay laser focused on my key stocks, but yet allowing enough information in to know that I need to eliminate this and add in this. And oh, well, technology is doing good. Oh, well, packaged software is doing good. Oh, now there's new hot stocks in the restaurant area, and being able to be malleable while yet still being laser focused. So it's a great question. What I would say is if you're questioning a trade and it's not what you would consider a 5-star setup, just don't take it. Paper trade it, Did I?
Answers question about,
What's that?
answers question undervalued. Actually, William O'Neill in this very book warns us about undervalued stocks. There is a school out there that teaches that you should only take undervalued stocks. But William O'Neill says that's nonsense. He said if it's undervalued for a reason. It really warns against, you got to really watch stocks that are undervalued because the investor community is seeing something that's wrong there.
Yeah.
Or they would buy. And I see this too. Before I met you, Dave, I bought OCUP because I was told to buy undervalued stocks.
Yeah.
And I was telling Stu just the other day because I went back, was going back through old tickers and looked up OCUP, which has a different name now. And it's literally the same price it was a year ago. It hasn't gone anywhere.
Yep.
It's still sitting there.
Yep. Yeah, it's sad too because people just keep doing this. They get stuck in this thing, then they lose a little money, and then what do? They just sit on it. They just continue to hold it. So you got to be careful with the undervalued stocks for sure. One thing he also said too was it's a weird phenomenon. Stocks that go up usually continue to go up, and stocks that go down usually continue to go down. That goes hand in hand with the undervalue as well. So just to kind of reiterate, guys, we use CANSLIM not to take every trade, but to make our foundation to base our trades off of. So do keep that in mind. It's a great place to get started. It's also a great place every trader can go back and kind of review and reamp. I showed you how you could use AI to help reiterate that CANSLIM method before diving into a stock. We have so many resources, including this amazing community for you to learn about a stock before you get into it. So if you're into, if you're in a stock that, like a lids, because, lids back in the day, it was up at $34 or $31. I think it'll get back up there. But yet, you're seeing they don't have any sales growth, and you can see that they're losing money. They're in debt, yada, yada, yada. They don't have any new products. They don't have any new management. There's nothing getting them up off this low. Then, you're going to be the one stuck holding the undervalued piece of crap stock. So stop buying crap. Start looking at leaders and start making some money. And that's all I got to say, guys. And I hope you guys have an awesome night. Peace, baby. Let's go. CANSLIM, baby. Let's go.